Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today on the show, you'll see interviews with executives of 3 public companies. First, Galaxy Next Generation, trading on the OTC. Galaxy Next distributes award-winning education technology products for the classrooms of today, empowering teachers with one-of-a-kind interactive experiences by leveraging digital content, learning data, and touchscreen technologies. Learn about their private label and branded product offerings in an interview with the CEO coming up in just a minute. Up second is MamaMancinini Holdings, stock symbol MMMB on the OTCQB. MamaMancini's is a marketer and distributor of a growing line of mostly Italian pre-prepared food items. Their products are available in leading grocers nationwide, and in the first quarter of fiscal 2019, revenue increased 45% to $7.7 million. Later, we'll find out how the company plans to continue its track record of strong growth. The final company you'll meet today is Esports Entertainment Group. The stock symbol is GMBL on the OTCQB. Esports Entertainment is a licensed online gambling company with a specific focus on esports wagering and the 18+ gaming. Esports Entertainment offers bet exchange style wagering on esports events in a licensed, regulated, and secure platform for the hundreds of millions of esports fans around the world. Now, before we get to our first interview, the quote of the week, and it comes from Chapter 9 of Small Stocks, Big Money. Nothing happens without a calculated risk. To be successful in any business, and particularly microcaps, you have to work hard, develop long-term thinking, and learn tenacity. This quote comes from Phil Sassower, featured in Chapter 9 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. If that's something that interests you, pick up a copy today on our website or at Amazon. Now let's go to our first interview today. It's with Megan McGahey. She's the COO and the Executive Vice President of Galaxy Next Generation.
Megan, thanks for being with us today.
Thank you.
I want to talk about your technology and where you're positioned in the market. You're in the ed tech sector, very large market, $17 billion market growing at 18% a year. Talk to us about your technology, your product, and your business model.
Sure. So we are a manufacturer of large-scale flat panels, touch panels, primarily for the education space. It's a pretty niche product because we've kind of positioned ourselves to where we're partnering with some software that brings us to a competitive edge over the other players in that market. We've been in the education market for roughly about 15 years and have kind of continued to grow with the evolution of that market itself. Love the market that we play in primarily because of its niche capabilities and the resources that we have at our disposal to continue to develop our products for the education market as it continues to develop the way our students learn.
So these are touch panel screens. You're targeting the K through 12 market. What are some of your competitive advantages?
We have several. I think probably for us financially, our biggest competitive advantage is our manufacturing facility. We're making our product out of South Korea. That gives us an allied advantage over our competitors who are all being made out of China. So our tariffs, our taxes, our imports are a lot lower. We also have developed the product to be of a higher tech standard. So we're doing things like more points of touch, higher sound quality. We've integrated with companies like Google from a software perspective so that we're able to kind of go into an education environment and streamline our product into the way that they're already learning and they're already teaching, which is really been a great sales factor for us.
What is the essential value proposition? Why should investors take an interest in the stock today?
I think it really boils down to the fact that we're extremely undervalued now. We had a semi falling off in 2017. We had about $4 million in revenue, had a small loss due to some rebranding and some restructuring of our sales force. We already have a pipeline in 2018 fiscal year of about $10 million. And right now that would mean that our stock is completely undervalued and ready for the investor to take hold of.
Well, I'll note the educational sector, we do see stocks trading at forward PEs of 20, 27, some even much higher, so I have to agree with you there. Let's talk about the competitive landscape. You touched on it earlier, but what differentiates you from your competitor other than your price advantage and some of the technological aspects? Are there anything else that really separates you from the competition?
I would say our support and services is probably the part that puts us on top of just the technical aspects. We have a full technical support staff in the U.S. as well as backed by our manufacturer in Korea. So we're able to offer very quick warranty repairs and service calls on top of the lower cost and the software applications that we're providing. We also put together a full training package, which I think is a huge advantage over some of our competitors. Probably one of the biggest complaints of these products in the market so far is that you're spending millions of dollars to put these products into classrooms where our teachers are not educated in how to teach with them and how to develop their lessons and structures based on the new evolution of the technology. So we've put together a full online training package that kind of goes along with the sale of the product so that they're getting the resources they need right out of the gate to make sure that these products are being utilized correctly.
What are your average gross margins on the product?
So we're averaging anywhere from gross margins is from 20 to 40, 45%. That leaves our net margins at around 12 to 18%, depending on the size and model.
To recap, what's the main takeaway for investors?
I would say the most important factor to remember is just that, we're a growing company that's really established a groundwork for the next 3 to 4 years to take advantage of technology and education. And right now, the product is hitting a point where it will go nowhere but growth at this point. And with our stock being valued at what it is now, you're looking at a big tradable, as you said, of a multiple of growth over the next 2 years.
Now, to get more information about Galaxy Next Generation, visit FLCRinfo.com. There you'll see research reports, fact sheets, presentations, and the latest videos on Galaxy Next. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. Now, our second interview today is with Carl Wolf. He's the CEO of MamaMancinini Holdings.
Carl, welcome to the show.
Thank you very much. Glad to be here.
Now, Carl, MamaMancini's is a marketer and distributor of authentic, home-style, all-natural Italian specialty prepared foods. In what other ways can we describe MamaMancini's?
We sell the whole line of Italian products that you just mentioned into supermarkets and club stores. We are in about 30% of all supermarket stores in the country today. We hope to penetrate substantially more in the next several months. In addition to the items you mentioned, we also sell other Italian products such as pasta entrees. We now have a sausage and pepper line, we have a chicken parmesan line, and we are introducing sauces momentarily. We sell in the perimeter of the store, which is where the consumers are going today for freshly prepared, delicious food. Our products, as mentioned, are all natural, clean, minimal ingredients. They're authentic and are very, very well received in the marketplace.
Carl, let's talk about the essential value proposition a moment. Why should investors take an interest in MamaMancini's today?
Well, we're selling into the faster growing area of the supermarket. The perimeter of the store where fresh prepared foods are sold is growing 8 to 10% a year. The center of the store is decreasing 1 to 2% a year. So we are in a vital growth area. Consumers come into the supermarkets every day or every few days to buy fresh food. So it's a very, very important area to the supermarkets and club stores, our type of products. We now are in approximately 43,000 spots on supermarket shelves, and we have given guidance that we are in active negotiations to increase our spots to about 70,000 by the end of the year. This would be a 70% growth. So it's very attractive. Our incremental EBITDA margins are about 25% of sales. So if all this happens, we should be having a run rate of around $50 million in sales by the end of the year.
Carl, let's focus on your business model. How does MamaMancini's make money?
Our business model is to find additional Italian products which are loved throughout the world. Our product line consisted of just meatballs a few years ago, and now it consists of meatballs, meatloaf, Italian entrees, sausage and peppers, a Sunday dinner, which is sausage and meatballs. We're now coming out with sauces. We have stuffed peppers, and we have chicken parm. So we now have about six items in our line, and so we can expand our business with existing supermarkets and increase our business with new. We are only in 30% of all supermarkets and club stores in the country. So we have very, very significant growth opportunities. We do not price any of our products below what we believe is a fair incremental profit margin to the company. So as we grow, we should see substantial additional profits. We have very low overheads. We have very, very strong production efficiencies. So as we get more business, we should be able to make that 25% EBITDA on incremental sales.
Carl, fiscal year 2018 was the strongest year yet for MamaMancini's. What were some of the highlights of that year, and to what do you attribute your success?
Well, we grew around 43% in sales for the year. We had a profitable year for the first time. We are now showing, we showed a cash flow, operational cash flow of around $1.3 million. We now are expecting to increase that very substantially this year. If we can get to the 50 million run rate, which is our goal by the end of this fiscal year, we believe we will have an EBITDA run rate of around $8 million. So that's very, very exciting for the company. We are negotiating, as I said, for very, very major market penetration with additional products with existing chains and new products with new chains. One of the reasons of our success is details. Keep the focus on quality, consistency, high operational metrics. We're a level 2 safe quality foods plant. We have on-time delivery. We have consistent product. We've just dramatically added to our quality assurance staff. We are building, just about completed a major new lab for our operations. So we expect to continue growth.
Carl, how big is the market opportunity for your product lines? How much of this market do you think MamaMancini's can capture over the next 3 to 5 years?
That's a very interesting proposition. We did $28 million in sales last year. The total market for prepared foods in supermarkets is several $1 billion. Food service is a $1 trillion industry, over $1 trillion industry. So we can easily double our size by going into food service in addition to supermarkets and club stores. We think in 3 to 5 years, we could easily be $300 million in sales, provided we meet our goals. At that point, the company will be earning close to 20% EBITDA, which would be $60 million in EBITDA, which would be quite exciting. We have around 31 million diluted shares at the moment. So let's just use this false goal of getting to an 8 million EBITDA run rate. That would be 27 cents a share. The metrics for comparable companies such as ours is about 20 times EBITDA market valuation. So you can do the math. Our stock is now around $1. So we think there's great potential future value for the company.
Sounds like a compelling story, Carl. Let's recap a moment. What's the main takeaway for investors? Why should they own your stock today?
Very rapid growth, one of the fastest of any company. Very high valuations in our sector of the business. Our ability to find and develop new products. Our significant gross margin and operating profit margin, or EBITDA, and should be able to come together. We now have significant success stories that we are able to sell additional customers in the marketplace. So we think that it's a very compelling story for our company.
Now, to get more information about MamaMancinini Holdings, visit MMMBinfo.com. See research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. Now, our third interview today is with Grant Johnson. He's the CEO of Esports Entertainment Group. Let's go to the interview.
Grant, thanks for being with us today.
Good to be here, David.
Give us an overview of Esports Entertainment, of your company, the recent developments, and then talk to us about your platform.
Okay, well, Esports Entertainment, we have launched what's referred to as a bet exchange platform. We're the first bet exchange in the esports sector. This is where, in a bet exchange platform, the players bet against each other instead of betting against the house. Because we've made that type of an arrangement, we've been very successful in attracting esport personalities, team owners, streamers to sign up as our affiliates. In fact, we have 111 affiliates signed up to date. So they will be marketing our exchange platform to their client base and their viewers. So we're pretty excited about that, of course. We just launched that in March. The affiliate platform fully launched just last week.
How big is the market opportunity for your platform?
The esports fan base is growing so quickly, the industry experts can't even keep ahead of it. Back in 2017, the size of the market eclipsed 350 million in terms of fan base, and it's forecasted to go back 590 million in the next 2 years. So it's increasing tens of millions of people per quarter, which is a huge opportunity, and there's no sign of slowing down. So in terms of the market opportunity, we are talking about an industry that's nobody's ever seen an industry that's grown this fast before.
And over the next 12 months, how many players do you believe will be using your platform?
Well, in our initial projections, we're looking for 50,000. We believe 50,000 people will sign up and make deposits based on the early results in the last 90 days of over 55 teams signing up to promote our platform. We may find those numbers to be very conservative.
Well, how do you make money? What's the business model?
Well, the business model is we've got the exchange and the players bet against each other, just like the business model in a poker room, where the poker room sets up the secure environment, makes sure that everybody's money's in the bank, makes sure everybody's allowed to be in the room, and then we take a percentage from the win. So we don't take exposure in the transaction like a traditional sportsbook would, and we don't take a position against the players like a traditional sportsbook would. So we just make sure that the regulatory environment's in place, and whoever wins, it's definitely going to be a player, and they're definitely going to get paid.
And what percentage do you take on the betting? How does that work?
Okay, our model is that we take 5% off the win. Some of the jurisdictions that we operate in Europe are higher tax jurisdictions. In the event that we are in a high tax jurisdiction, we have to pay the government tax, of course. We could see that we need to take a higher amount of 10% from the win, but generally our take will be 5%.
And are you comfortable with giving any revenue projections, 12, 24 months?
What I can say is if I stick to our initial projections, which as I mentioned, may turn out to be quite conservative, our projections see us as getting revenue positive in the 18 to 24 month timeline. I'd like to make sure that I have some hard data from operations before I give some hard projections. So I'm sure we'll be talking frequently, and I'll be able to give you hard projections by the end of the calendar year. But right for now, we see ourselves as being revenue positive by the end of next year.
And how are you different or better than your competitors?
Well, there's several reasons. One, the exchange. All of our competitors offer a sportsbook model. In our research, we did 2 years of research, deep dive into the esports sector. And what came back resoundingly was that the esports people, the fan base, do not like the sportsbook model where they give their money to the house and then play against the house. and the house has to win the majority of the time. Keep in mind, the average esport player, esport fan, has post-secondary education. So they're, on average, have a higher educational level than the average sports fan, just what the market shows us. So that's the biggest differentiating factor, is the bet exchange. Second, we're the only esports company that's publicly traded. So we have the oversight of the SEC, which shows transparency. These are the two main differentiating factors between us and our competitors, and this is why the affiliates are signing up with us in record numbers.
And how does the recent Supreme Court decision on online gambling and gaming affect your business?
This is huge as it pertains to the U.S. market in particular. Of course, being a U.S.-listed public company, it's big for us. The reality is it'll probably be 18 to 24 months before the regulatory environment is clear as to how we will proceed, because esports betting will be managed the same way and regulated the same way as traditional sports betting. So there's still quite a bit of work to be done before that takes place. But what it does do is it gives the confidence to the marketplace in the United States that this is not an illegal or dirty word industry. This is a legal, regulated industry, and we will operate in a legal, regulated fashion. The U.S. market clearly is huge, and from a stock standpoint, it should make our stock more attractive to U.S. investors.
What is the essential value proposition for investors today? Why should they own the stock?
Well, the simple fact of the matter, this is the fastest growing sector or the fastest growing industry. So the value proposition is we are the only public company in the sector. If somebody is interested in being involved in the gambling side of esports, which, as I mentioned, is the fastest growing section of the entertainment industry, we are not only their best option, we're their only option at this point in time. We also are adding a tournament play platform, which will be rolled out by the end of this calendar year. So we're not just the proverbial one-trick pony. We are going to have two offerings, and the skill play platform, the tournament platform, will be available to American players by the end of this calendar year. So the value proposition is the ability for U.S. investors to get in on a huge market now instead of waiting until there's many competitors and the market's already well down the road. We're at launch.
Now, to get more information about Esports Entertainment Group, visit GMBLinfo.com. See research reports, fact sheets, presentations, the latest videos. Now, it's all free. You can even subscribe to email alerts to stay on top of the latest news. Now, let's recap the three public companies we met with today. First, you met Galaxy Next Generation. It trades on the OTC. The company has fiscal 2019 revenues forecasted at 20 to 22 million, with net income of 3 million, and they expect 40 million in annual revenues by 2020. To learn more about this company, visit FLCRinfo.com. Then we met MamaMancinini Holdings, stock symbol MMMB on the OTCQB. They recently reported 2019 first quarter financial results. Revenue was up 45% in the first quarter, and strong growth is expected to continue. To see more highlights about this company, visit MMMBinfo.com. Now, the final company we met with today was Esports Entertainment Group, stock symbol GMBL on the OTCQB. A recent Supreme Court ruling overturning the federal ban on sports betting could accelerate growth for this leading bet exchange provider in the rapidly expanding esports market. Now, they've signed more than 100 affiliate marketing partners, including leading esports teams, owners, and streamers, which should fuel impressive growth in the quarters and years ahead. To learn more, visit GMBLinfo.com. Now, as a reminder, these stocks are for your speculative money. Gains can be significant, but you must be prepared for the downside. Clients on this show may sometimes pay us in stock, and while you're buying, we may be selling. You can read our full disclosure at RedChip.com. And if you're the CEO of a public traded company and you're interested in participating on this show, give us a call at 1-800-REDCHIP or submit a message on our website, redchip.com. Thanks for being with me. I'll see you same time next week.